Hey, this is Mark Deaton with RenegadeTrader.com, and we're just going to talk about Candlestick Patterns 101. Okay, this is the basis of a candlestick pattern. On the left we have an empty candlestick, if you will, and on the right hand side we have a full candlestick. I'm talking about the real bodies. The white one is the empty candlestick, and it indicates to us that the opening was in the bottom and the close was in the top. The wick, which is just representative of the high and low, looks just like a candlestick wick or string up from a candle. So you've got the open, the close, the high and the low. On this bearish black candlestick, it's full, so it's bearish. The open is at the top, the close is at the bottom. Then you have the low on the bottom candlestick and the high on the top. So the highs and lows obviously don't change at all. But what changes a candlestick from being a bearish or a bullish candlestick is whether or not it's full or empty. This changes a little bit from charting program to charting program, and they can be green, blue, red, black, gray, but generally the darker ones are the bearish full candlesticks, and whether they're blue or not, green, whatever, if they're empty, they're bullish. Okay, this is just a piercing line, this pattern right here. It's a bullish reversal pattern that's under the 5-minute, and it shows us, we'll ignore the wicks for now, but it shows us that the price opened and closed down low, okay, and price gapped down but closed more than halfway through the middle of this candlestick's real body. That's what makes it a piercing line, okay, and this is a bullish reversal pattern. Imagine, if you will, price coming down, 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 gapping down, looking on the market open or this candlestick's open as if it was going to continue down, but then it proceeds to move beyond the 50% mark of this real body. Interesting thing about this pattern, or this example I'm showing you, is that on a 10-minute chart, this is what that's going to look like. Okay, because price comes, opens here, okay, comes down. Now let's say it's been 5 minutes, okay? This particular one's going to jump over and open up to move up, but on the 10-minute chart, it just moves up and closes here. Both of these are bullish patterns, and the hammer is a bullish candlestick. And the reason it's a bullish candlestick is because if we look at just this candlestick here, the 10-minute candlestick, price opened, moved way down, but yet the bears didn't succeed in sustaining their reach, and the bulls moved them back up. Okay, so but this 5-minute little pattern here, this is exactly what that looks like on a 10-minute chart. So this equals this. Okay, now let's get into it. This is an abandoned baby. There's a little gap up right here. Price moves down, 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 open, close down here. This open and close was the same. So this crosses a doji here. Little gap up, then a move up. Nice bullish reversal pattern. This is a Morningstar doji, identical except there's no gap up. Down, down, open, close, little doji, little move up here, and basically a nice swing low, okay? And that's also a bullish reversal pattern. Okay, this is a Morningstar. It's not a doji. Same thing here. We have a trend down to this little spinning top, where price opens down here and closes. Does make a high, does make a low. Doesn't necessarily need to make a high or a low to be a Morningstar. But then we have this little move up, and then this bullish candlestick. The open down here, close up here. Next is the piercing line, one of my favorite and a very reliable pattern, where we got a downtrend, nice big candlesticks here, a little bit of a gap down, and then this piercing line moves up beyond the halfway point of the previous bearish candlestick, closes somewhere above that. The more this thing closes above that, the stronger the pattern is. And then, of course, if it exceeds the open of the previous candlestick, it becomes an engulfing pattern. Kicker, also a very reliable pattern. You know, you got a downtrend here. We got an open and close, and the open for the next candlestick is equal to or greater than the previous open, and then we have a move up. Okay, and we want to see a candlestick with a kicker that's as close to the previous candlestick as possible. The bigger it is, the stronger the potential move. 3 inside is move down here. Okay, a candlestick that opens and closes higher within the bearish candlestick's real body, and then here's the beginning of your move right here. Okay, it's called 3 inside, 3 inside up, 3 outside. Okay, we have a move down. Okay, open, close down low, little move down here. When I say little move down, I mean the close to the open is down a little bit. Okay, then we open up higher, engulfing the previous candlestick. So you start off with a bullish engulfing pattern right here, and then an open and a close higher than this close right here, and that's 3 outside. And really all these patterns are, each candlestick is telling you something, and you just need to learn how to look at the candlesticks and just interpret what's going on. You know, if we're looking at a daily chart here, it has longer potential, longer term impact. If you're looking at a 5-minute chart, you know, things can change. You're looking at more shorter term plays. This is 3 white soldiers, just a move down, and then a nice consistent move up. We got an open, a close, open down here, low, a close, and an open down here, low, and a close. This is a 3 white soldier pattern, and it's a bullish reversal pattern. Keep in mind, these candlesticks here just represent a downtrend. All these examples, these 3 are kind of like blank candlesticks that represent a downtrend. Okay, and that is the end of our bullish reversal patterns, and look for part 2 very soon. Once again, my name is Mark Deaton. If you want to go to my blog, you can visit renegadetrader.com. Thanks.